30th of December is a Wednesday, and we are in the last second trading day of 2015. My name is Dylan, and welcome to my daily trading analysis video. So today we're going to start off with the dollar against the Swiss franc. Alright, so what we have here is day one chart, and as we can see, there is a symmetrical triangle back then. It has finally broken above, came all the way up to 1.0324. But that price, it came all the way down. So we've seen the first wave of depreciation right here. Alright, and it starts to go into the consolidation. Therefore, we expect the price to depreciate again as the second wave of depreciation, and hopefully it can go as low as it touches the top of the previously broken symmetrical triangle. Alright, so let's zoom in the smaller time frame. In the 4-hourly chart, we've seen that there is a symmetrical triangle right here. So after the first wave, it moved into consolidation, forming a symmetrical triangle, and into the smaller time frame, 1-hourly chart, we are just waiting for the price to gain a little bit again further. Close enough to the top of the symmetrical triangle, or probably back to this level, recent level of 0.941 to go for the sell. And the first take profit level, of course, we'll be looking at is all the way back to the bottom of the symmetrical triangle, followed by the support level right here at the price of 0.802, and finally back to the to the top of the previously broken symmetrical triangle, some of the price of 0.680, and that will be the final level to take profit. Yes, and based on the fundamental itself, there's pretty much no prospect for the US dollar to appreciate any further till we have more clues when they're going to raise the interest rate again after their first rate hike in 16th of December. Alright, so that's for the dollar against the Swiss franc. Next, let's take a look at the dollar against the Japanese yen. So back in the day chart again, there was also previously a very huge symmetrical triangle right here, and finally it has broken on the 24th of December. Oh, that's Christmas Eve. And so right now we expect the price to continue to depreciate further. Right, we can see that the price loves to move in the range, came down, another range, went up, went to another range, came down again. Now it's moving into this range again with the price of 120.81 to 118.52. So we can expect the price to continue to depreciate further till it at least touches 118.52. Alright, so we are looking to sell. And based on the symmetrical, the Fibonacci retracement, we would like to see the price came up again, retrace all the way back to at least a retracement level of 30.2% at the price of 121.37. Alright, but however, if you look at the smaller time frame in the 1-hourly chart, we do see that there is already a symmetrical triangle that's forming right here. Price has broke below, okay, came a little bit up, 15-minute charts, and as it came up again, touches the bottom of the broken symmetrical triangle, it begins to fall again. So we may not be able to see the price retrace all the way back to the 30.2% level based on the 4-hourly charts, and it may just continue to fall right here. So if this candle forms with a very bearish candle, that will be the time to just go for the sell right away. Alright. And of course, again, we are just looking for the price to fall all the way. The first level you might want to take note is, of course, the previous low right here, and then all the way to the bottom at 118.52. Alright, so next we have the Aussie against the US dollar. So just a very quick summary. In the day one chart, we have the ascending triangle right here. So price is being supported at the bottom, begins to rebound, appreciate. Into the 4-hourly chart, what we want to see is, or rather what we want to wait for is a major retracement to a key support level before we go for the buy for the second wave of appreciation right here. So we can always plot the Fibonacci retracement, pull it all the way up to the top, wait for it to come all the way down. It seems that the retracement level of 30.2% is still pretty alright. You can see there's support right here. Alright, but as of now, we do not have any prospect of going for the buy because it's still kind of high in a small time frame. So we just want to wait for the price to retrace and not to make any decision right now as it has went pretty high. Alright, so just wait for further retracement, and that's for the Aussie against US dollar. Next, we have the New Zealand dollar against the US dollar. Alright, so just take a look at the 4-hourly charts right away. We have the rising trend channel. Price has got supported. It begins to rebound all the way, broke above the final exhaustion level. The price is 0.6847. I'm going to remove this level. And right now, we're seeing that the price is making a retracement. So that's a good news for traders who are looking to go for the buy. And what we can do is to plot the Fibonacci retracement again from the bottom to the top. Wait for the price to retrace, and seems that the retracement level of 23.6% could be a good price to go for the buy. So we shall see what's going to happen next as the price touches here. It seems the price is already beginning to pull back. And it does 15-minute chart. Right, so that's pretty much not that we can do anything right now, but let's just wait for the price to go to retrace a little bit further till it touches this level and see what's going to happen next. Hopefully we can see a proper setup to go for the buy again, and we are expecting the price to appreciate a lot further. Based on the structure we have right here, we can expect the price to appreciate at least first back to the top of the rising trend channel in the 4-hourly chart. And as it broke above the key level that we really want to take profit in a longer time frame is at the price of 0.7168, retracement level of 61.8%. And finally at the price of 0.7223, as that is a key support level based on the weekly chart, the day chart itself. So there's really good prospect of profits to be made from the long position. But let's wait for the price to retrace, and we shall see if we can go for the buy soon enough. Alright, and last but not least, I would just like to touch on the pound against the US dollar. Supposedly, we have a structure right here, a structure that resembles a inverted head and shoulder. Of course, that is definitely not the ideal one. Therefore, it breaks below, came all the way down back to the bottom of the falling trend channel that's based on the day 1 charts. It pulls back, and therefore that gives an opportunity again to go for the buy at a much better price. So into the 15-minute charts right away, we want to wait to see when can we actually go for the buy. In fact, right now we can see that there is a reversal signal right here, a bullish candle that is closest perfectly right here at this price. Then we may just want to go for the buy right away. But if not, we would like to wait for the price to just retrace a little bit further. Let's connect these two parts. Let's put it down. Alright, probably as it retrace again back to the bottom of the channel right here, some of the price of 1.48 to go for the buy. Alright, and the first level that you want to take note of in the 1-hourly charts, back to the support level right here, the price of 1.4873. Then the previous support, or rather the resistance, the immediate resistance, followed by 1.4942, and all the way to the final exhaustion level, the price of 1.5028. That's really a great profit to be made. And if things just go so well and it really goes all the way back to the top, then that is a potential profit of 400 over 450 pips and above to be made from the pound against the US dollar. Alright, so that's pretty much for today, and thank you for watching, and I'll see you again tomorrow, my last trading day of 2015.